And just like that, we're back to all-time record highs on the S&P 500. We just completed our 7th straight up session for that venerable index. Today we were up 0.3% off of some positive commentary from the initial jobless claims falling to their lowest level, at least on the 4-week average, since before the COVID crisis. We also saw bond yields continue their recent surge. We are now at 5-month highs on bond yields. And a lot of this was driven by positive earnings announcements, at least up until today. We'll go through a couple of real stinkers here after the bell on Thursday evening, where the tone might change just a little bit as we start trading on Friday. So we'll look at all of that, see what it means for our posture. Then we'll get into our trade application example, where I wanted to feature a bearish options trade on an online retailer. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's October 21st, 2021. First of all, for those of you that are new, welcome aboard. Go over to YouTube, click subscribe on our channel. While you're there, go down to the description area and be sure you're signed up for our email distribution list. So that way you can be notified anytime we post these videos. You'll also get the benefit of seeing which stocks are giving you overbought and oversold cluster signals within the S&P 500 at the bottom of those emails. We're also heavy users of Twitter. If you're not doing so already, I would encourage you to follow me at Brandon Van Zee. And we really appreciate those of you that click like and retweet on the Market Outlook related tweets in particular. Last but not least, we do have a presence on Facebook. Feel free to join our group at that web address you see in the logo in front of you. All right, let's go ahead and jump into today's trade activity. And speaking of Facebook, I suppose that could be a pretty good segue. One of the big stories developing here in the after-hours session on Thursday is that Snapchat just reported their earnings, and that stock is getting absolutely annihilated after hours. It's down about 25%. So this is kind of what that air pocket is going to look like tomorrow. We ended the session on Snapchat at 75.11. It's currently trading down there around 57. It had actually gotten down all the way to 52 at one point at the lows, but has rebounded a little bit there. But that is some really ugly activity there. Remember, Snapchat's actually a very large company these days. I know it's not really that I'm in their target audience, as I don't use the app myself, and many of you probably don't either. So sometimes we might poo-poo the heft of the company. But if you were to come over here to the Analyze tab and click on Fundamentals, down towards the bottom, it should show the market cap. There it goes. $76 billion company. I mean, this is not a small fry. This is a huge company. To put that into perspective, if you want to look at Twitter, which is something, of course, I use on a regular basis, and many of you do as well, Twitter is only a $50 billion company. So Snapchat is $25 billion larger than Twitter. But you will see that after hours here today, Twitter is also getting hit a little bit. They're down a couple of bucks, kind of in sympathy there with Snapchat, as is Facebook. Facebook ended today's session at 341. It's currently trading at around 325 in the after hours session. So that might put a little bit of a cold blanket on some of the tech trade that had been so robust here in the last 7 days or so. Tomorrow we might have a little bit of a give back day for some of those kind of internet names, and in particular in the communications area where a lot of these social media stocks are housed. So remember, there's some of the biggest players out there when you're looking at something like a Facebook. We also saw, by the way, Google down, or Alphabet, whatever you want to say there. But Alphabet's down about 3% there as well. So remember, those market cap weighted indices might take a little bit of a hit tomorrow because the biggest market cap companies are showing some wear and tear after hours tonight. Speaking of which, another big kahuna out there, this time in the semiconductor world, Intel is getting smashed after hours today as well. It ended the session at $56. It's currently trading at 51 after hours. It's about a 8% move in that particular case. There were a couple of good movers after hours. If I'm not mistaken, Chipotle For those of you that enjoy your burritos. Looks like it's actually down now, so I take that back. Early, when they first announced their earnings, the stock did pop all the way up to $18.85, so that was about a $40 move above the closing price. But as time has gone on here, it looks like investors have taken a second look at that report and have actually sent the shares a bit lower now. So they're trading at 18.15 right now from the closing price of 18.43. So another one to the downside there. Then I also saw that Mattel had just reported their earnings as well. Not as big of a company these days as it may have used to have been, but nonetheless worth mentioning that their stock is at least up here. So there were plenty of other companies reporting their earnings today as well, but those were some of them that caught my eye on business television that I thought I would pass along to you. But I think for me, the big story is what's going on with Snapchat. That is an absolute massacre right there in the social media stock. So brace yourself if you own any of those social media companies. Tomorrow might be a little bit of an ugly day. Since we're talking about stocks, let's also kind of get a sense of what happened during the normal session today by coming on over here to our Visualize tab, where we can look at our heat map for the S&P 500 on this record-setting day for the S&P 500. Notice that we did have some big players out there. Of course, Netflix continues to surge on the success of their new series called The Squid Game. It's up about 4%. We actually talked quite a bit about Netflix today in my question and answer session. It's a company that I've had some history with, some interest in their investment over the last decade plus. We also see that Tesla had a big 3% move here today off the back of their earnings report yesterday. Remember, one of the conversations I've been having with you here more recently is the market cap weighted discretionary sector ETF has really perked up recently, and I've been mentioning that it's basically controlled by 3 companies, and here is a good kind of visual of why I say that. Right in this area here is the discretionary sector, and the bigger the block is means the bigger the market cap is. So notice that, of course, Amazon is the big kahuna within that particular sector, but then Tesla comes in next, and then Home Depot is in after that. Nike's not all that far behind, but really it is those 3 that control XLY. So you'll notice that all 3 of them were up pretty nicely today, so I have no doubt that when we go to our 12 grids and look at our sector ETFs here after a little bit, that we're going to see a continued breakout in XLY and the discretionary stocks from a market cap weighted perspective, because those 3 big kahunas there are going to be leading the way once again. You did see a little bit of a mixed bag in technology today. Apple was basically break even. Microsoft did close higher by 1%. Nvidia has been a superstar stock for a decade at this point. It was up nicely, up about 2.66% there. In some of the smaller tech players, we did have a little bit more wear and tear. IBM really got smoked here today. It was down 9% off of their earnings announcement. Remember, IBM will be doing its spin-off of Kyndryl here in a couple of weeks, if I'm not mistaken. It might be about a month from now, but anyway, remember that IBM is a dividend aristocrat company, but by spinning off the new growth-focused business, however you want to say that, I am curious what sort of their dividend paying capacity will be, and whether the main parent company of IBM will be able to maintain the dividend that they had been paying at ever higher rates for the last 25 years. So I'll be very curious to see how that is kind of broken up and what the Standard & Poor's committee thinks of that when they go to talk about the new dividend aristocrat list starting in January. And then also PayPal was down quite a bit today. It was down about 6%. Remember, PayPal has been in the news recently for potentially buying Pinterest, which, of course, after tonight's bloodbath in the social media stocks, makes you wonder if that stock is going to have a little bit of pressure here as well. But some investors not very pleased about the prospect of PayPal kind of drifting off course a bit there and potentially heading into the social media world. You'll also see that energy struggled here today. Kinder Morgan, I think, had their earnings announcement. They were down about 6%, but then you did see some pretty healthy give back in the big boys like ExxonMobil was down about 2%, and Chevron was down about 1% there. We did have some wear and tear in the financials as well. Discover Card was down 6%, Synchrony was down 5%, and Capital One was down 4%. So some of those credit card players have been struggling on a relative basis, and that conversation has kind of been pushed along by the buy now, pay later phenomenon that has benefited stocks like Affirm and others. So anyway, that's a little bit of a lay of the land there for you today within, once again, this record-setting day on Wall Street. Let's take a look at the more general charts now here on chart 4B for those of you that are following along at home with the charting package that we offer to all of you who are premium members of Market Scholars. This first kind of view here on this foregrade is going to show you the 4 major U.S. equity indices, and the color-coded background will help you determine whether the current posture is bullish or bearish. When the background colors are green, as they are now in all 4 of these charts cases, that means we have a bullish posture. If they're dark green, like they all are right now, that means we have a strongly bullish posture. Now, that's not anything new because I told you the same thing on Tuesday, right? So we haven't had a change since then because the market has continued to go up since then. So nothing has changed on that point other than the lines have strengthened further. Remember, on Tuesday, we were just approaching the 50th percentile there on that green intermediate line on the market forecast for the NASDAQ composite. And with it having continued to go up here, we now see that that green line has made it all the way up to 74 right now. So it's made some good ground in a hurry there. As mentioned to you on Tuesday, it still feels like the Dow is the leader at this moment in time. You can see that its intermediate reading is basically 95. Remember, these numbers do not go above 100. So just to put things into perspective for you, that is about as strong as you can get. And that's what happens when you have 7 days in a row to the upside like we've seen in the market, at least for the S&P 500. If you want to count them out, it started there on the 13th of October. There's 1, 2, 3, 4, 5, 6, 7. Which is rather impressive, and it doesn't happen all that often. I did post this on Twitter here just a moment ago. In fact, it was selected today as the chart of the day from the chart report. And so for those of you that are not familiar with the chart report, I would encourage you to follow them as well. And I appreciate the shout out that they gave me here today on my chart, but they do a good job of highlighting a technical analysis chart each day on Twitter that is relevant to that day's trading activity. And so it's a good aggregator of technical analysis for those of you that aren't following them yet. Their handle is at the chart report. But anyway, that chart that I shared there has let me kind of go down to my original post where I've put it right here. You'll see that the chart itself does have a couple of those golden rectangles in there to show you when the last time was that we did have 7 days in a row, and it was back here basically late June is when that occurred. So it's been some time, and it's also noteworthy to me to see how quickly this kind of sell-off that we've had in the month of September was unwound. A lot of times it's kind of the opposite. Notice how this time around the steepest part of the move actually happened on the rebound. A lot of other times what you find is that the steepest part of the move happens on the decline up front, and then you slowly get back to all-time highs. This one was a little different. It's not that was a slow move or a fast move. I think it was just kind of an average move lower there in the month of September. But this move from the low to where we got to a brand new all-time high today happened particularly quickly. And, it just goes to show what the benefit of a 7-day move higher without any pullback days along the way can do for a market. It can change the fortunes in a hurry. And as I was mentioning to you guys, a month ago when we were declining in that market, I had said that I am not going to be surprised at all if we hit new all-time highs by the end of the year. And here we are just at the end of October doing it. I figured it would take a bit longer and we would get there in November or December. So how quickly this has happened has even surprised me. But nonetheless, I'm not surprised that we are at another all-time high. Remember, all else being equal, particularly in a time like this where the economy is reasonably strong, the Fed is highly accommodative. You should assume that higher prices are around the corner unless there's some sort of major news event that would change your mindset around that. But right now, we have a reasonably healthy environment for stock prices, and therefore we should assume that we'll have a relatively robust market as we head towards the end of the year. Remember, from a seasonality perspective, September is usually a little bit ugly. October can be, but October is equally notorious for setting a bottom and then having something to bounce off of into the end of the year as we head towards that Santa Claus rally around the holiday season. So we'll see if it plays out this way again this year like it did last year, but right now it's looking pretty good on that count there. While we're over here on the internet, I might as well take this opportunity to say thank you to all of you that help support the Market Outlook video. I appreciate Bailey as well for making a mention there in the replies. But I appreciate all 109 of you that clicked like for me. Remember, it only takes you 5 seconds to show your support for this. It's a way that we judge whether it's useful time for us to set aside 3 hours of our day to produce the video and do the edits and send everything out and do the trade alerts and all that kind of stuff. So thank you to Deborah and Dennis and Fun Jonesy and Dennis and Member and Anish and Evan and Michael and Irene and Sedona, John, Fred, Dave, Common Sense Investing, and the list goes on and on and on and on. You guys are amazing. We really appreciate that. Please keep it up, and that's your best way to kind of help us identify that you want us to continue to do the videos going forward. Also, while we're over here on the internet, wanted to share with you the factor selector update that was done on Tuesday evening. Be aware that momentum is back in the driver's seat right now, which is a very strong sign. Remember, of these 6 different factors that we have here, momentum is the one that I would prefer to see leading the market when we have the healthiest markets. Remember, momentum can kind of change its stripes very quickly if needed, and can move from sector to sector to sector, basically feeding upon whatever seems to be working at that moment in time. But it is a measure of risk appetite, as it's basically people chasing performance. And when people are willing to chase performance, it's usually the sign that the market is alive and well. So I, for one, am happy to see momentum back on the top slot there after a brief 1 week dip lower there. On the downside, low volatility remains dead last. That's largely a interest rate sensitive story with a lot of utilities and REITs being part of that low volatility particular factor right there. Also earlier today, I taught my question and answer session for my premium members. So if you missed it, if you were at work or what have you, and you wanted to know what we talked about in case you want to check out the recording over the weekend, I got a question about what resources do I use to look for companies that are cutting or raising the dividend. So for those of you that want to see kind of how I go about my process of discovering those companies and some of the resources I use on Thinkorswim and things like that, check out that question. Also got a question about momentum factor and how often it's at the bottom of the factor selector. I got a question about analyzing the company and the business model of A.O. Smith, the water heater company, which is a great dividend aristocrat company. It's done very well over the last decade. I also got a question about a very unique ETF or ETN called COM, which is actually a commodity ETF that does not issue K1 forms, which is fairly rare for commodity ETFs, and why they have so many holdings of U.S. Treasuries. So kind of broke that down a bit. We had a long discussion about Southwest Gas and Carl Icahn's $75 tender offer for the company, and the poison pill that the board of directors over at Southwest has taken, and kind of that tug of war that's been taking place there over the last couple of weeks. And then also got a question on the coffee can strategy for my own personal live account, and sharing some of my pros and cons of things that I've learned over time with stocks like Netflix and Trex and Intuitive Surgical, and the way to think about long-term investing for kind of growth compounders as opposed to the old school dividend growth mindset. So if you're interested in any of that commentary and you're a premium member, that has now been posted up here in the Trading Rooms tab of our website. Let's get back on track with our discussion on the Thinkorswim platform. Just to put a bow on things for the various indices today, the S&P 500 was up 0.3% today to a new all-time high, which now stands at 45.51. We closed near the high of the session, which is generally a bullish attribute. We now have a rising 30-day moving average. Remember, that is different from when I was with you on Tuesday. On this candle, we were still seeing that moving average decline. So we've now had enough persistently upward movement where the 30-day moving average has now started to curl higher. That is also a bullish feature. The Dow Jones Industrial Average was down just barely today, probably as a result of IBM's poor earnings results, and it was down 0.02% today, but it also closed near the high of today's session and just narrowly missed its own record high. It also has an upward bending 30-day moving average. Down below here in the lower right, the Russell 2000 was up 0.28%. It's still a stone's throw away from its highs from back in early September. Nonetheless, we do continue to have that strongly bullish posture along with an upward rising 30-day moving average. Notice the colors of those moving averages are all green on those three. And that's what makes the NASDAQ composite a little bit different. Notice that the NASDAQ still has the yellow moving average, telling us that in this case, price is above a falling moving average. If the NASDAQ can continue to work its way higher and eventually take out that all-time high from September 7th, then without a doubt that moving average will eventually curl higher as well. But that is just a reminder, once again, what I've been mentioning to you guys lately, that the NASDAQ has turned into our laggard, and you can identify that, first of all, by the fact that its posture shifted later than all the rest of them. So while it does have a strongly bullish posture, it was the last one to go to that dark green background. Right now, it's the only one that does not have a green moving average tip. And you can also look at the intermediate reading of 74 and notice that it is well below the 88 on S&P 500, the 95 on the Dow Jones, and the 81 on the Russell 2000. And with today's news regarding Snapchat and Intel, I'd have to believe that the NASDAQ stands a pretty decent chance of having a sell-off day tomorrow. How bad it gets is anybody's guess, but right now the odds are probably better than not that the Qs take a little bit of a sting in the morning. Let's just take a look at the Qs after hours right now, just so I can verify that with my own eyes, and indeed that is the case. Notice that QQQ, which is an ETF that tracks the NASDAQ 100, which is a pretty good proxy for the NASDAQ composite, closed at 377 here today. It's currently trading down at around 374 right now, and you can see that after hours selling taking place there. So might throw a little bit of a cold blanket on the NASDAQ story once again tomorrow. In terms of three green arrows, we probably still have three green arrows across the board. We do, so nothing new to report there. Remember, this was already the case on Tuesday, so it's just a confirmation here visually for your own eyes that we're still in that condition with all four of our major equity indices, 3 green arrows across the board. Let's take a look at our 1040 crossover method now. Since this is Thursday and David is still on vacation, he won't be with you tomorrow for the video, so this will be kind of a little bit of a wrap up here. We usually like to look at the 1040 crossover towards the end of the week because these are weekly candles that we're using on this particular chart 4C here. So for those of you that are newer to looking at it, the orange lines on the charts are the 10-week moving averages. The blue lines on the chart are the 40-week moving averages. And when you're in a healthy bull market, you want to see the orange lines above the blue lines. When that is the case, you will see that the background colors of the charts will be green. So it's an easy way for you to identify that longer term strength or posture, however you want to think about that. But we've had a 1040 crossover on all of our charts for over a year at this point. So it's not like this is anything new. However, I would point out that we were starting to get pretty close, particularly here on the Russell 2000, of a potential death cross. That would be when the orange line would cross below the blue line. But it's starting to look like it might just bail itself out here, if you're getting that impression. Notice that the green line down below, which is the PPO, which ranks the difference between these two moving averages up above here, was going down at a very healthy pace after having these really robust moves here that were kind of in the top 10% of the PPO, where we were getting extremes, where that orange line was extremely high over that blue line right there, where these little green dots show up during that time period. So we've now been kind of blowing off that steam by going sideways. Fortunately, we haven't plunged lower to blow off the steam. But you will notice that an initial move lower in that PPO, that green line was going down at a fairly rapid clip there. Notice that here in the last couple of weeks, it feels like it's stabilizing to me. It looks to me like it's kind of going sideways. Let me right click and go to maximize sell here. You can kind of see this a little bit better down below. Notice that downward descent right there on the PPO was very rapid during this period of time. But right here, week over week, it looks like it's been stabilizing and going sideways, and that's because the last couple of weeks we've started to see that Russell 2000 heading higher again. So I think there's a pretty decent chance, especially from a seasonality perspective, that this thing could get bailed out here, and this orange line could start separating itself from the blue line to the upside once again. And remember, that's a bullish feature to the market. So I kind of like the way that this is stabilizing and maybe setting up for a nice move into the end of the year for the small caps. And traditionally, that is a time when the small caps in particular outperform. So I think those of you that are starting to make your bets in the small cap universe, you've got a lot of things in your corner at this point. Let's go ahead and take a look at our 12 grid analysis now, starting with chart 5A. And the first thing I'll start with is what I'd mentioned in the intro. One of the big stories that we've been talking about a lot here in these videos is what's going on with the 10-year Treasury yield. Notice that we are now at 5-month highs here, breaking out yet again. So that's 1, 2, 3, 4, 5 days in a row of upside movement in interest rates. We had this 3-day pullback right here, which was a little bit precarious, but we immediately unwound that, and just like that, new multi-month highs. Remember, that is supportive of financials. And so if you're trying to take advantage of that move and you think it will continue, then banks and brokers, insurance companies, and the like tend to benefit when you see that behavior. On the other hand, utilities and REITs tend to struggle a little bit on that count. Notice how that inverse relationship is holding with bonds, with interest rates up today, and we closed officially at 1.67% on the 10-year. The bonds all acted the way that you would assume they would. We were down on the long-term U.S. Treasuries, we were down on foreign bonds, and we were down on high-yield bonds. Notice that all three of those also have the dark pink background, telling us that we have strongly bearish postures on them. Chart-wise, I kind of like a bearish trade setup here on high-yield bonds. Why I'm a little bit hesitant on it is because a lot of times we have correlation between high-yield bonds and oil prices. Oil prices have continued to surge, so If you think that that correlation is about to unwind a little bit and you're a brave soul, then I think the high yield bonds might be setting up for a nice bear call spread opportunity here, as it looks like we're kind of rolling back over to the downside after having this oversold cluster dictate a bit of a reversion to the mean type of a move. So keep your eye on that possibility there. The dollar was up today, so it was up 0.24%. That helped put a little pressure on gold, which was down 0.09%, and on oil, which was down 1.22%. However, you'll notice the postures are exactly the opposite. So on a one-day basis is one thing, but intermediate term basis, we're seeing something else, where we have a weekly bearish posture on the dollar, strongly bullish postures on oil and gold at this point. Of those three, clearly it is oil that looks the most impressive from a trending perspective. But one thing I would point out is I don't mind this setup right here for the US dollar. The problem with the dollar is it's really kind of hard to do options trade on them because UUP really doesn't move enough for you to be able to construct different multi-legged strategies on it. But perhaps those of you that are a little bit more refined in your currency trading will find other ways to kind of take advantage of that. But I might be willing to put a little bit of a bullish bet on the US dollar right here. I like the way that it's stabilizing right there on its rising 30-day moving average, and we did close near the high of the session here today as well. So I'm going to be keeping my eye on that, but I think there's a decent chance here that the dollar could bounce from this exact level. Let's go ahead and take a look now at our sectors. Oh, by the way, Bitcoin did fall today. So Bitcoin was down about 4% here today. We find ourselves at around 62,500. Remember, within the last 24 hours, we did hit all-time highs in Bitcoin up there at about $66,000. Of course, we had the conversation in Tuesday in this video about how there's the new Bitcoin ETF BITO, and I believe tomorrow there will be a competitor to that that'll come out that'll be BTF. So some interesting, public launches this week. We also saw WeWork, the much maligned WeWork IPO that was supposed to go off at about $50 billion a couple years ago, went the SPAC route more recently and raised about, or at least is worth about $10 billion here after the SPAC was converted into an actual stock ticker WE today for WeWork. Let's also take a look here at the sectors now. And so let's take a look at chart 5C for that. And as you can see, we've got bullish background colors for all but the staples at this moment in time. Now remember, on Tuesday, I showed you that we did the bullish trade on Kimberly-Clark, and so far so good on that trade. I'm happy to see that the staples have rebounded from that level, and as has Kimberly-Clark specifically. But it's just not been enough of a rebound to actually have a bullish intermediate posture at this moment in time. So we'll see where that takes us, but without a doubt, the trend of consumer staples is not strong. Remember that trade that I showed you on Tuesday was to try to take advantage of kind of an oversold situation from a longer term perspective, but trend-wise, the staples do not look very good right now. Most of them on the bottom rung, the more defensive areas of the market, do not look all that strong from a trending perspective. Our better trending sectors out there are energy, financials, and like I mentioned before, consumer discretionary. Take a look at that candle right there on XLY. Remember our conversation from about 20 minutes ago when I was showing you the big movers out of the discretionary space in the S&P 500 today, in particular Tesla, Amazon, and Home Depot. They are yet again controlling price activity here in the consumer staples. So are all consumer staples going up this rapidly? No, it just so happens that the biggest market cap ones are, and so it's kind of dominating the price action here out of XLY, but that is a runaway chart that we're looking at there, thanks to Elon Musk and Tesla in particular. We also have some reasonably good price action, I would say, out of technology. It doesn't, to me, look as good as those other three that I just mentioned, but at least we now do have a rising 30-day moving average there with technology. It might be short-lived as a result of some of those tech stocks like Intel selling off after hours. Notice what I had mentioned before as well. We can confirm it with our own eyes here, that with Facebook and Snapchat and Twitter and those social media companies getting hit, remember, those are communication stocks now. They used to be part of technology, but they're now part of communications, and we can see it right here with our own two eyes. There is going to be an impact on a market cap weighted communication sector tomorrow. XLC is how you can track that. It closed today at 82.12. After hours, it's trading down there close to $80.50. So remember that Facebook is going to be the most influential member of communications, and Google is right there next to it. But obviously, the Snapchat news is kind of driving some negative sentiment into both communications and technology after hours. So don't be surprised if both of those struggle tomorrow. And neither of the charts look great. Of the two, I do think technology looks a little bit better. But right now, I'm still feeling most comfortable trend-wise with energy, financials, and then discretionary as well. In terms of who today's biggest winners were, no surprise looking at that candle there on discretionary that it was discretionary. It was up 1.47%. Today's biggest loser appears to be financials. It was down 0.42% here today. All right, let's get into our trade application example now. And for that, I wanted to bring up, let's just do a swing trading chart here, chart 3A. And I want to bring up a company that my top-down trend trading class knows pretty well, and that is Chewy. However, in this case, I did a bearish trade on Chewy. This stock has struggled here, as you can see, for the last couple of months after hitting that high of around 97 on August 11th. It has really struggled. In particular, it seemed like it was its earnings announcement that really kicked things off. Notice that big gap that we have there, that air pocket on that chart. And it was never threatened to the upside. So, it's continuing to move lower until otherwise, noted. And right now, we haven't seen an actionable change of direction. Notice that the moving average color here on Chewy is red, telling us that price has been below a falling 30-day moving average since September 2nd. No coincidence there, that was the top in the market. Now notice where this stock was trading on that day, and today was the day when the market hit a new all-time high. So in other words, the stock market has fully recovered all of its gains since that day. Chewy has just continued to sink lower and lower and lower. For those of you that are not familiar with this company, they really made a name for themselves during the coronavirus pandemic. This is the online pet foods company where they'll deliver a big old bag of dog food to your doorstep if you want. So I have a feeling that they are not down and out forever. While this chart looks pretty ugly right now, I would expect that some people will be very sticky customers. In other words, they'll see the benefits of having heavy dog food delivered to their door, even when the coronavirus is a thing of the past. But right now, it appears that the stock market prefers other types of merchandise out there. So what I ended up doing in this case was what's known as a bear call spread, where we concentrated on the November contracts. I believe we sold the 70, bought the 71 or the 72. Remember, your Telegram app will give you all the details on that, because I already did the trade earlier today during the session and sent that out to all of you who are premium subscribers of Market Scholars. So that way you get the benefit of kind of seeing the analysis and the trade setup prior to the folks that are watching the free video later that night. But that was what I ended up doing. It's a little bit more dicey simply because the markets have gotten more bullish, but in a way, the markets have gotten a little bit too bullish. And I would expect that there should be a pullback day here in front of us sooner rather than later. And so I'm kind of hoping that market kind of cools off a little bit. Very happy for all of our bullish trades, by the way. So remember, we do way more bullish trades than bearish trades on these presentations. So from that perspective, I'm thrilled that we've been up 7 days in a row. But I do also like to have some balancing trades here and there. So took that opportunity today with Chewy, seeing it kind of rounding the corner here, looking like it's kind of going to start bouncing down and away from that falling moving average there. You can also see the background color of the chart went to pink from blue. What that means here in this case is the blue line, or the near-term posture, has changed to bearish here in the last couple of days. And you can see that it's obviously been underperforming the S&P 500 over this 3-month time period of this chart. In fact, all of our performance labels up at the top are negative for Chewy. It's down 29% year to date. It's down 11% over the last month, 24% 3 months, down 17% in 6 months, 39% in 9 months, and in 1 year it's down just under 4%. So it's basically flat year over year, but has been showing a little bit more negative price action more recently. So kind of playing into that here with the bear call spread that I did for the month of November on Chewy. So that's what I had for you here today. Appreciate you guys checking out the video. Remember, if you got value out of the analysis, if you learned a few things there along the way, I'd appreciate it if you click like for me there on Twitter. As long as we're getting up and over 100 likes, I have no problem dedicating the 3 hours to my day to do these videos. And if that's the case, I'll plan to be with you once again there on Tuesday. And then also a reminder, David is still on vacation. I believe he gets back on Wednesday. So it'll be interesting to hear his take once he's back from his trip to see what he thinks about these markets moving forward here as well. But no video tomorrow, but I'll plan to be back with you on Tuesday there, as long as we get enough support of the video there on social media. So with that, I want to wish you all the best of success with your trades and your investments. Goodbye for now.